Good morning. As we promised, we're going to be talking about money. And we say money makes the world move, and we move with it. Well, talking about something that has taken the banking industry by storm, and we term it as fintech. This is digital lending. That loan that you processed through a certain app through your phone. But what is the status of digital lending in the country? What are the challenges? And to take us through this conversation is none other than the chairman of the Digital Lenders Association of Kenya, Mr. Kelvin Mutiso.
Thank you for having me.
Thank you for your time. When we talk about money, it's a very sensitive issue. And I'd want to start off with some of the feedback that we received this morning when we posed that question and told them we're going to be talking about matters of digital lending. The question was, why is digital lending more expensive than physical based, or rather the traditional mode of lending?
So the innovation in digital lending is actually quite progressive. So there are three things that digital lending has solved that manual lending hasn't solved. The first thing is what we call know your customer. So KYC, we do that on a digital platform. The second thing we do is the credit scoring. Right? Credit scoring means, how do I make sure that Regina is able to pay me back? Right?
Yes.
So that is also collected from digital data sources, and then we go through an algorithm, and then we say Regina approved patia 15,000. Right? Then of course there's the disbursement. Now before us, you could not give a loan below a certain amount, and in those, I've been lending for 17 years, and it was about 100,000 shillings. It was quite difficult to give a loan below 100,000 shillings because of the cost of doing the KYC, the cost of doing the scoring, and the disbursement. Today, we're able to do that all digitally, and we can give loans as little as 500 shillings. So that's number one.
Convenience. I'm hearing convenience.
Yes.
It is more convenient, timely. Actually, people get it on the go.
And relevant.
And relevant.
Yes, when you need it is when you get it. Yeah.
The question is, at what cost? Because the regulator, we have been having bills left, right, and center to just try and regulate this industry. Among the issues that Kenyans have taken up with is the interest charged on these loans. So
it depends, right? So we've got two main customers in digital lending, and what we're talking about today is unsecured digital lending, right? We've got two main customers. We've got the consumer lender. This is somebody who borrows money to consume. So, you download the app, and then you take the money and you go to buy new pair of shoes, a new pair of address, etc. The other type of customer is the MSME, the informal sector entrepreneur. They form the majority of our customer base. And what they use our money for is to go and make more money with our money. So we are giving them capital. Now, when they were asked, do you care about price in 2019? FSD the Financial Sector Deepening Report 2019 put price as the number 3 issue the customer has, right? One of the reasons the price is the way it is because the cost of doing what I said, the KYC
credit scoring, and
has to be pushed to someone, right? The other thing is that we still have systemic issues that the industry needs to solve, and those systemic issues cost us a lot of money. Right, so we still push those costs to the customer. What we expect from the bill is that once the bill passes, we shall then have a reduction in price, and it'll be a more competitive market. Yeah.
So you're for regulation?
Oh yes, we are.
Now let's talk about data protection, because I feel today I go on an app, will not name names, and I fail to actually own up, or rather pay up. You will call my boss, you will call my dad, you will call my husband, you will call everybody. The issue of data protection, there's a very thin line when it comes to that. Privacy, the agreement was between me and the app, not me and my clan. Why do we find ourselves there? So
what you described is called debt shaming, and it's illegal.
Yes.
In fact, if it's still happening, right, reach out to the digital lender. I'll tell people, reach out to us.
Okay.
Because about a month ago, all the perpetrators of this bad habit put it out in public that if if anyone is threatened by any of their agents, they give a number and they will offer a reward. So you can even make money if you're being harassed by these debt shamers. So that's what I'd implore. So that practice is done.
I hope that he's called Simiu. Yes, Simiu, who had asked that question, has heard from the chair of the Digital Lenders Association of Kenya, Mr. Kelvin Mutiso, who is here with us in studio to just try and address the issue of digital lending, the status, where we are, the challenges from their end as well from their consumer. Thank you very much, Simu. You had posed that question, the issue of, the harassment that you're getting. And he says that that particular app, you go back to that particular app, there's a customer relations, I think, number that is there. Lodge that complaint and you'll get a reward. And actually you'll get redress because debt shaming is illegal.
Yes.
Thank you very much for that clarification. Earlier on when we started our broadcast, we had told them we're going to be having this conversation. So we keep on checking what we're receiving. Now, let's talk about the issue of now regulation. You've told me that there's a bill that the Digital Lenders Association is actually pushing. What is contained, what is different than what we have been seeing, CBK trying to, regulate fintech.
Okay. So the first thing I'd like to say about that is that regulation is not necessarily a bad thing. What is a bad thing is bad regulation. Right. So we're in a country called Kenya, which is actually an amazing country because we have rules and regulations and we follow the rule of law. Right. So we have the CBK amendment bill in Parliament being debated right now, and it has just passed the second reading. It shall now go to the third reading and then assented by the President. Now, what is in this bill? This bill is trying to address two major issues. It's trying to do consumer protection. This is where they're trying to say, okay, you must treat the customer in a particular way. There must be a conduct that the business must have to interact with the customer. So there will be issues around data protection, there will be issues around marketing, there will be issues about transparency, right? And if you've listened to the governor of the central bank since he began his tenure, he has certain principles he speaks about. And some of those principles include transparency, right? Customer centricity, accountability, etc. So this bill is actually capturing that. The second piece is, how do you make sure that the business can remain innovative, right, agile, because fintech, right, is the future of the world, not just Kenya, not just Africa. It's the fastest growing sector in the world. So what this bill is also trying to do is trying to ensure that we as the fintechs, right, are able to innovate. So I'll give you an example. Today, we can only give unsecured digital loans. In the US, almost 70% of digital loans, mortgages, are through digital loans, right? What does that mean? I am applying for a mortgage on a computer or a smartphone, and I don't ever enter a bank even once, and I can get a mortgage to buy a house.
That's an awesome.
Yeah, that is where we want to be, right? That is where we want to go. And this bill is trying to make sure that we can achieve those kinds of innovations while making sure that we protect the customer. In fact, the governor of the central bank calls it citizen centricity. Yes.
Well, we hope it actually sails through the third reading with the amendments and the proposals therein. We'll wait to see how it goes, because we have been seeing some bills, taking too long as the industry, rather the subsector, continues to grow. There's a question that has come in. They have named an app, but we're not going to name the app. If I default, basically the question is, if they default, can they be listed on CRB?
That's another huge misconception. The Credit Reference Bureau is a list, right? So think about it like a register, right? And the way it works is that if you ever take a loan, all we do on the CRB is record your behavior around that loan. So when we're doing appraisal, there's a thing called willingness to repay, and we must find out, is Regina willing to repay the loan, right? And the way we test that in our market is through the Credit Reference Bureau, so that if you've ever taken a loan and repaid on time, it's there, right? If you've taken 15 loans and you repaid all those 15 loans, it's there on the Credit Reference Bureau. If you paid 2 days late, it's there, it's marked paid 2 days late. If you default, it's marked default, right? So being on the CRB is not a bad thing, Right?
It's not necessarily a bad thing.
No, being on the CRB is not a bad thing, full stop, right? Being on the CRB with a listed default is a bad thing. That's the difference, right?
Yes.
So anyone who's ever taken a loan,
you're on the CRB.
You're on the CRB.
The reason is that it's different.
No, it's just a record. It's a register. It's basically saying you took a loan on 1st August and you're meant to pay it on 30th. Then on 30th, somebody will say you paid the loan on 30th. Then you took another loan on 2nd September. So it just records the number of loans you take and how you behave around those loans.
Now then that brings us to the question of data. We're in the age of data. Data is king.
It's the new fuel.
Yes, it's the new fuel. So, issue of data protection. All this data that the industry has. How secure is that data? Mine, James, Victor, every person, because we're all looking at how many billions did we transact before COVID? We're talking around 4. Yeah. Now it's gone down by half because of this COVID situation. So we might as well say everybody is on that list, whether on a D or you're a good data. How secure is that data?
Okay, so just to go back to the Credit Reference Bureau, the CRB, I'd like your listeners to know that your audience know that we are actually number 4 in Africa. Our credit information sharing framework is ranked number 4 number 4 in the world, number 1 in Africa. Right? So we are the leading the credit.
We are the pioneers.
We are the pioneers. And what we should aim to be is continue being the pioneers. Why? Because fintech is the fastest growing sector in the world.
Sure.
Right? So let's go back to data protection. Again, we're in an amazing country called Kenya. We've got the Data Protection Act 2019, one of the most progressive regulations in the world. What the Data Protection Act does is that it gives you the consumer rights and gives you, tells you what we, the business, can do with your data, how to share that data with third parties, etc., etc. Now, is your data secure? It is as secure as it can possibly be, right? So, yes, because data is the new fuel, there's a lot of potential data breaches. Yeah. But us in the digital financial services sector, one of our key competencies, because we have money, is actually security. Right? So since the Medicis in the 12th century,
Medici family,
to today, if you're in lending, you're one of the best in security because we are always protecting an asset, right? So the way we protect that asset is the same way we protect your data.
Well, we hope so. We hope so. Data is king. We totally hope so.
No,
and I can see so much feedback coming through, and I think we need to take that again, the issue of debt shaming. And this is something that Kenyans are going through because we have a Nancy from Kitengela asking, and I'm going to read it. 2 questions. Why do the lending apps take numbers from the one's contacts list and call them to demand payment? Second, what about those that take loans and change their mobile number, then take a loan with a new number? Address those 2, Kelvin, Mutiso, as we continue with this conversation.
So I'll tell you some interesting insights, right? I told you about credit scoring.
Yes.
One of the most interesting insights, for example, the Tala team has told us, right, and put out in the public, is that if you save your number, so if I saved Regina, say Kelvin Mutiso, which is my name, and I save it with a capital K and a capital M, right? There's a real correlation between your willingness to repay. It means you're more organized. It means it's no.
Should I check how
the data tells us that. It doesn't matter whether it's true or not. The data tells us that. So that's why we take your contact details now. Now, the debt shaming is illegal. And I'm actually telling that customer, if you're being harassed, right, write to DLAC, tell us who's harassing you, and we will forward that harassment and the proof of that harassment, and we'll forward that to the relevant authorities. Because that practice should have stopped a month ago, because all the perpetrators even put out press statements saying they have stopped. So if it's still happening, report it now.
Nancy from Kitengela, I hope that has come through for you, that if it is happening, well, you need to write to the Digital Lenders Association of Kenya with proof that this is actually happening, and they will forward it to the relevant authorities. Debt shaming is criminal.
Yes.
It's a criminal offense.
The second question about people changing numbers. Remember, the Credit Reference Bureau, right, is using your ID as a unique identifier. To get a SIM card, you must use your ID, right? So what I'd advise customers is focus on paying back the loan. Don't focus on avoiding not paying the loan. And don't run away. Lenders actually prefer, if you communicate in good time, that I will be unable to pay the loan as the contract states, and you may have to give me time. What that does on the lender side is you've reduced our cost, because we have a collection cost, right? And when you tell us in good time, you might find the lender is even willing to waive late fees or late payment charges, and that happens, right? So what I'd advise all customers, communicate with your lender, right? Because if we lose money, because if you don't pay us back, we've lost money, right? You make our lives more difficult. So we have to charge the next customer a little bit more.
Now, talking about making life difficult, I'm hearing it through the earpiece. Someone is asking, but some apps frustrate customers, and I think you need to elaborate on the issue of credit scoring and how then this affects if the person, an individual, if they actually get the credit or they miss out on the credit.
Look, lending is a partnership. Right? You're telling me, Regina, no, you're saying, Kevin, I have a business, I need 10,000 shillings, kindly give me 10,000 shillings. I am saying, okay, let me measure the risk of giving you that 10,000 shillings. Are you an honest person? Do you have the cash flow to pay me back? And are you Regina? Right? Are you really the person you say you are? Right? If you tick all those boxes, you should be able to get a limit and then a loan. If you don't, right? The onus is on now the customer to prove a little bit more why they should be taking a risk on. Does that make sense? And that's the way lending works, because we don't just have a bag of cash sitting somewhere and we're just disbursing it for the sake. We have to make a return. We have to pay back our own loans, because how we lend money is we take a wholesale loan, right, that's priced, and we have to pay back that loan and make the margin the difference. Same way people who sell potatoes, right? You wholesale potatoes, then you retail potatoes. Yeah, you buy potatoes at 10, you sell at 12, and the final guy sells at 20.
One more question. We've said the bill that is coming in, and we hope it does and changes the way we do business. You've said it is citizen-centric.
That's
right?
What we hope.
Yes, we hope. It is us hoping, the consumers, it is us hoping. The issue of reminding someone who has your debt, I'm supposed to pay up on Friday, and you start reminding me on Monday of that week. Isn't that an overkill? Or are those perks or disadvantages of the business?
Every business has its own collection strategy, right? If the consumer is saying, please send me one SMS a day or one SMS a week, I think they have the right to make that claim. What I don't agree with, however, is telling us exactly how to collect, because at the end of the day, it's us who took the risk. Right? So what we're basically trying to do is protect our investment.
What I'm hearing is terms and conditions apply.
Yes. Because remember, it's a partnership.
True.
If you want to remain, if you got 2,000 shillings today, let me tell you, in 2 years, you potentially have 500,000 shillings, because we want to retain our best customers, right? And we want to grow. So if you're a duka and you have 1 duka today, and if it means that we work together, we can have 10 dukas in 2 years, why wouldn't we want to do business with you?
It's a partnership.
It's a partnership.
Now, how many digital lending apps are in the country? Statistics put it at 120. You're the chairman. Are we 120?
This is the hardest game in the world. So digital lending, because of how young it is in Kenya, the number of companies that start in January and collapse by April is 100. So the average number at any given time is 120. The total number of apps that have ever existed are probably around 500, right? But there are only 20 main ones. and they're all members of the Digital Lenders Association.
So there are 20 main.
Yes, 20.
Now let's go risk to a potential client. As you've said, that those that start up and in 3-4 months they're out of the market.
Because the customer stops paying. You know, the problem here is that the default, the customer
the default rate is too
high. The customer defaults and they go out of business, right? That's how it works. If we don't survive, if you don't pay us back. Yeah.
So it's the fault of, actually, there's a correlation to debt management when it comes, personal business and such. Now, as we speak, we're talking about, post-COVID recovery, and we have the stats. Money passed through this fintech, or rather subsector niche, 4 billion before COVID. Now we're doing half of that. Post-recovery strategy, from where you sit.
So we were doing about 4 billion shillings pre-COVID.
Yes.
By the end of last year, we're halfway. We are back.
To
400.
To 4 billion, sorry.
And more, and growing very quickly. Why? Because one, the consumer has finally understood. In fact, a majority of our customers have finally understood the importance we play, the role we play in their lives. And so they now take our debt, our partnership a little bit more seriously. The second thing is we innovated last year to try and identify what we call the very best. We call them grade A, right? And what we focused is just we're trying to make sure that grade A is getting as much good service as possible. So what you'll find is that we were lending 4 billion to 6 million people pre-COVID. Now we're lending 4 billion to probably 2 million people, right? So we've removed a section of the customer base because, one, willingness to repay has not been proven, right? Two, ability to repay has been affected. Yes.
True. Now we are running up towards the elections. The elections are just around the corner. From a business point of view, what's your take? Every time we have elections,
we get nervous.
Everybody gets nervous. Wanjiku gets nervous. Fintech.
That's a very good question. So this is what I'm going to say. In 1997, I was in Standard 4.
Oh, wow.
And I remember July 7th very, very clearly in my mind, because the fear that it created in my household and my relatives, because we have relatives all over the country, like most Kenyans, because of what was happening was real. Fast forward to 2021, and we have a constitutional amendment being proposed by the leader of the state, the head of state, and the country wasn't nervous. What that tells me is that our democracy has matured and is maturing, and therefore the nervousness is not warranted anymore. What I'm hoping is that the leaders that will present themselves next year shall maintain the maturity and respect of the Constitution, because the Constitution is actually what has made that has given us that stability, right? So I hope the conversation remains mature, and I hope that the leaders that are coming in 2022 also follow this current administration's respect of the rule of law. Because the rule of law is what governs any functioning society. And I think we have gotten to a point where if we continue on this trajectory, where a constitutional amendment is not met with violence, is not met with instability, is not met with nervousness in the business community, like it did in 1997, which is what I remember, I think we have matured. And so I would be, as an investor, if I was sitting outside Kenya as a foreign investor, I'd actually now start thinking, how can I take 10-year bets, 20-year bets in Kenya? Because it seems like this society and this community, this country is finally mature.
Coming of age.
Coming of age.
Now, you've said 20 apps are, members of the Digital Lenders Association. If, suppose one of these members of these apps goes rogue,
we eject them. There's a disciplinary process. We usually see we have to follow the rule of law again. So we have a code of conduct. We have a process through which you have to prove, the customer has to prove that that their rights were breached, then the business must make a case that they did not breach. If we find that they did, then they are ejected. If they're not, which is not usually the case, we've had one incident, we sort of create measures for redress. So we find out what went wrong and try and solve that particular customer's issue.
Now, speaking of that, give us some stats. When you look at the demographic when it comes to consumer lending, who is borrowing more in terms of gender? Let's start off with gender.
That's age-based, so you'll find that between 21 and 30, it's 50-50. As you go up, it's so more male, less female. And that goes depending, but it's quite obvious there are more males borrowing above a certain age than female. In terms of who's borrowing the most, it's the informal sector entrepreneur in urban centers. So the Nairobis, Nakurus, Mombasas, Kisumus, that's where a lot of the borrowing has happened. They're using our money for three main things. Emergency expenses. Right, so the business has a sudden shock. They need a quick 5,000, need quick 10,000. They borrow. They use it for working capital. So I'm a kiosk owner, I'm a boda rider. I need fuel. I'm an Uber driver. I need fuel. Right. They use that for working capital. So they whip the money. Right, and it gives them back some money. And then the third thing, interestingly, is school fees / health emergencies. Right now. That's a beautiful story, because what it's saying is that we're not interrupting the life of a child. We're ensuring that somebody is able to go to school. We're ensuring there's some money in the pocket to buy some medicine, etc. What we need to do is improve the product. I agree, we need to improve the product. But those are the three main reasons people borrow.
So now fintech is here to stay, as you say. I mean, technology is what is driving the fourth industrial revolution. What is then the future of traditional banking services as we know them? And we've seen banks actually go mobile now, but the future.
So I love this topic because I'm a banker genetically. Banking is one of the most innovative industries in the world. Why? Because we hold the cash of the public and institutions, right? And then we lend to all the sectors. So you'd be surprised that the larger a bank, the more visibility they have on the economy, because the data is real. Now, are they moving in Kenya? Are they moving digital fast enough? No. Right? And that's why we came in. But the bank still has a very crucial role to play, because they are licensed by the CBK and they have such strict rules they must follow. There's a certain level of security, right, or risk that they manage and mitigate for fintechs. So actually the future is not fintech only or bank only. It's the collaboration of the two, right? So I'll tell you, there's a product, for example, that I'm working on that's specifically for the boda ecosystem, right? The lending is likely going to come from a bank, right? Because it's the cheapest source of capital. But the interaction with the customer will be the fintech. We're the ones who are going to make sure that the customer care is done properly and in a modern way. We're going to make sure that we are designing products very specific to that niche. You know, Regina doesn't need a helmet, but the boda ride needs a very quality helmet so that it's long-lasting, etc. So that's what you're going to see, those collaborative efforts. How fast are we moving? I don't think the Kenyan banking ecosystem is open enough yet. I think they need to be more open. I think they need to sort of look at what the telcos are doing, because there's one particular telco that's doing a lot of things right, right? But its banks should be actually doing what this particular telco is doing. So that's where I see that going. On the continent, Kenya is 10,000 kms ahead.
And we need, I think, this is totally my opinion. With us going mobile money, it opened up a world of opportunities, and innovations are going to be coming. As you said, you're already working on one. So we're not going back. There's no going back. But even as we leapfrog and go, we need to also remember that we need to be customer centric.
Yes, agreed. Agreed. Completely, 100%.
Yes, at least I've won you over on this side, or you never were on the other side.
No, you see, the concept, I think and this goes back to a maturing society, right?
Yeah.
The concept that capitalism is exploitative is an African mindset because of our colonial history.
Yes.
But the truth is, capitalism is the best system for an evolving society, so long as the capitalism that is being practiced is sustainable. The only way to practice capitalism sustainably is think long term. Right? To think long term, you must make good bets, good decisions. And the best way to make a good decision in business is make sure the customer is looked after well.
Oh, please. And that's all we require.
Exactly.
Thank you very much, Kelvin Mutiso, who's the chairman of the Digital Lenders Association of Kenya. Thank you for your time. Well, you've heard it. If you have been experiencing this debt shaming, that's the legal term. It's debt shaming, that you have an app, you picked up a loan, you have either you've defaulted or you're almost, the day to repay is almost, and people are calling, harassing you, calling people in your contact list. You need to inform the Digital Lenders Association of Kenya, provide the proof, and this particular app, or rather lender, is going to be brought to book because apparently they're listed and they have a code of conduct. So the customer is always right, and we have just heard that even when it comes to digital lending, that doesn't change. We will be looking at what is going to be happening in Parliament in as far as matters regulation, and as far as digital lending is concerned. So we are likely to see a change. But remember, data is king. I'm Regina Manyara. You're watching KBC Channel 1. This is Good Morning Kenya.